Hello and welcome, StockCharts TV viewers, to your weekly installment of the GoNoGo show. I'm here with my good friend and co-host, Alex Cole. How you doing?
I'm doing very well. I'm very well. Good day today. Not so hot.
And you're about to leave us, right?
I am. Yes, got some travels coming up for the next couple of weeks.
Very good. Well, we wish you well and happy trails. But for this week, we're going to dive into the current markets. And next week, Alex and I are going to pre-record some educational content for all of you, still airing Thursday afternoon at 3:30 p.m. But Alex, let's dive into what's happening in the markets right now by looking at a go-no-go heat map across our asset classes, just from that top-level perspective on what we're seeing in terms of trend. And for all of you who are new to GoNoGo charts, just a quick review: the colors represent a blend of multiple technical indicators, the weight of the evidence, if you will, multiple indicators on our checklist that tell us the direction and the strength of a trend. So when we are in an uptrend or a go trend, we're in blue and green, the blue representing the strongest form of those trend conditions. In no-go trends or in down trends, we see pink as the weaker form and purple as the strong form of those bearish conditions. And at points of uncertainty, we're going to see amber bars of the neutral readings across our blend of technical indicators. And as we like to call them, those are the go fish bars, after Jesse Livermore's famous quote that there's a time to go long, a time to go short, and a time to go fishing. Alex, I'm seeing a lot more blue and green on this screen, certainly on the right-hand side. Talk to us about what you're seeing across the asset classes.
Yep. So, the rotation that we have been talking about now for several weeks is really persisted. And you can see the move toward more risky assets. We'll talk about that a little bit later when we look at the sector RelMap as well. But just from looking at the major asset classes, strong blue go bars for equities. We've really seen a strength since the amber bars of uncertainty, and then the aqua, the weaker go form, really giving way to strong uninterrupted blue bars. You can see that across this top panel. And then Treasury bond prices also entered a go trend, but have weakened a bit since. Now, the real areas of, I guess, depending on who you are, I suppose, excitement or at least areas of interest, we're seeing commodities recapture a go-colored bar here with that first aqua bar, and the dollar today painting a no-go bar. That is really, really something we haven't seen on the dollar chart. We'll look at that as we go through the show as well. But coming out of the go trend, an amber bar yesterday, and then a no-go bar on the dollar today.
And so even if you're not a fixed income or currency or commodities futures trader, there's a lot of information to be gleaned from these other asset classes and the intermarket relationships that play out. So Alex, let's switch gears. Let's look at the S&P 500. Let's take a look at that daily price action. We talked last week about how the markets were approaching an area of overhead resistance. A lot of institutional memory at those price levels. This week, we're seeing that continuation of the go trend and a breakout above resistance. Talk to us a little bit what's on this chart.
Yeah, exactly as you said. We were talking about this over the last sort of week to 10 days about how we were running up against this resistance here, this overhead supply. We saw, historically on this chart, looking back to June, that there were a lot of sellers at these levels. So then as we approached these levels, but now in a go trend, with positive momentum on our side, we asked what would happen. Would we struggle? Would we get turned away? And it took us about a week to get above those levels. And we did see a counter trend correction arrow appear here, suggesting that we might struggle to go higher in the short term. And we did. We consolidated at these levels a couple of times on an intraday basis. We tried to get above, but we came below. And it took us until yesterday to get above that level. And then today we seem to be consolidating above those areas of resistance. So those are all good signs as the go trend continues on strong blue bars above what was now resistance. And what happens to something that used to be resistance? We know that it should become support. That's the concept of polarity that we talk about so much.
And from a philosophical perspective, right, trend followers are not trying to anticipate market movements. We're not trying to forecast what we think will happen or what should happen or could happen. Instead, we want to react responsibly to the evidence that the market has shown us. So in mid-June, when we were at that absolute low, our trend followers are not trying to catch falling knives. At that point, we don't know what July and August hold for the S&P 500 index. So we're not entering trades when the conditions are not ripe for it. So for a long position to make sense, we want to see that checklist, the weight of the evidence in our favor, the wind at our backs, so to speak. And we knew that last week we were at a pretty important inflection point as this recent relief rally met with overhead resistance. And so, of course, seeing that breakthrough and then confirmation again today is just further evidence of this perhaps constructive phase, the accumulation phase for the S&P 500. Alex, if you'll do me a quick favor, let's pop this out to the weekly perspective. So again, all investors have to decide their time frame. That's a personal choice. You're going to set your own risk parameters and the time frame that you like to trade. So even with the bullish evidence on this daily perspective, when we jump out to the weekly perspective, right, we're gonna need to see more of that accumulation, more continued go trend conditions before we would see the weekly chart start to reflect that positivity. Alex, what's right there on the right-hand side of your chart? I see some evidence in the bottom panel, the GoNoGo oscillator just breaking above zero. Talk to us a little bit about what you would like to see in this chart to convince you that the longer-term perspective is also entering go conditions.
Absolutely. So as you said, price is most important, and the price trend tells us that the weight of the evidence still is a no-go on a weekly basis. Now, those weekly bars have weakened. We're seeing a string of pink bars, and we know that on the daily basis, we're above this resistance and that we're in a daily go trend. The one thing that I circled here down on the bottom right is that we can see the oscillator after bullish divergence, where we saw the oscillator making higher lows versus the price making lower lows. The oscillator has broken this week above the zero line into positive territory. And we know that that shouldn't happen if the no-go trend is healthy. Look at the flip side. During the whole of this go trend, the oscillator stays above zero, finds support at zero. When it doesn't, that leads us then into this choppy period before the transition to the bigger correction. So now we're on the other side, no-go, oscillator below zero, finding resistance at zero. And then we were looking here to see what would happen on the weekly basis. This is the first sign that there may be a threat to the no-go on a weekly basis.
And so if you're an investor who rebalances your portfolio on a weekly basis, keep in mind that final pink bar that we're looking at on the chart is not complete yet. The week is not over. We're here midday on Thursday, August 11th. We could see, with enough bullish action on that daily chart, if we close ultimately a lot higher tomorrow, that could mean trend change for the weekly chart. So keep in mind that GoNoGo charts are never altered or restated after the time period ends. But that final bar there for the week that we are currently trading is not complete yet. So we're waiting for the rest of the data to come in. And so if you're thinking about rebalancing towards the end of this week, we'll certainly hope you check out your GoNoGo charts on Friday afternoon or Saturday morning to see where we closed.
And that's also applies to the oscillator, right? Right now, the weekly values for are telling the oscillator that we're dipping into positive territory. Should we fall off tomorrow, we may see that oscillator still riding the zero line. These like you said, they never restate after the close of a bar, but during the period that we're looking at, you can see those indicator values change what you're seeing on the chart.
Absolutely. Well said. Let's turn away from the S&P 500 index and let's look at a couple of those macro forces that might be presenting opportunities to risk investors, to equity investors broadly. Let's take a look at the TNX. So when we looked at the cross-asset heat map, we saw that Treasury bond prices were still in those weak go conditions. So there's bond buying, which of course moves inversely to our chart of the rates. So the TNX, the 10-year Treasury yield, the rates are chopping around. Alex, help us interpret what we're seeing on the chart right now.
Right. So on a daily basis, in terms of rates, we are still in a no-go trend. We've come off these ultimate highs here, suggested by that counter trend correction arrow that gave way to a no-go trend as the oscillator breaks below zero. I hope that this starts to sound familiar. This is how, you know, you walk through the trade or walk through the price action and the technical analysis on the chart. Once this no-go now has been in place on strong purple bars, we're looking at the zero line to see if it acts as resistance. And right now, as you said, we've seen a bit of sideways action, oscillator at zero, and a go-no-go squeeze building. The go-no-go squeeze, remember, builds for every bar that the oscillator remains at the zero line. And that tells us that there's a little bit of a tug and war and not much directional momentum as we see price volatility shrink as prices move sideways. So another important point on the TNX chart.
Absolutely. So at this point, we're looking to that momentum oscillator as our leading indicator of continued directional trend in price for Treasury rates. Alex, let's take a look at our favorite, the US dollar, that's been providing a lot of headwinds for equity investors and risk assets broadly. We have seen weakness in that really incredible trend, not seen in 20 years, the strength in the US dollar index. And here today, making history for all of us right before our eyes, the US dollar is in a no-go trend. Talk to us a little bit about what we're seeing on the far right side of that chart.
So we love to use traditional technical analysis with the go-no-go charts because we aren't putting anything else on the chart that obstructs our view. So very quickly, this horizontal level of resistance pops out at us when we look at the chart, and it becomes support here on the right side of the chart. So when we were putting out the research this week, we were talking about how the oscillator had broken below zero, but was at zero, testing from below. We were saying that this is in conjunction with price testing this level that was support that had been resistance before, and how important it would be that we hold this level if we are to see the go-no-go trend continue in the go direction. And what did we see instead? We saw the oscillator get rejected by zero. We saw a doji. If you were to look at this candle closely, you can see that the open and the close are at very similar levels. That's a doji pattern if you look up candle analysis, which means uncertainty. So very cool to see a doji on an amber bar, right? So we've got an uncertainty on that bar yesterday, and we see a no-go bar today as the dollar is lower again, with the oscillator now below zero. So we can say that the trend conditions have changed enough to paint a no-go bar, and the momentum is in negative territory, confirming in a way what we're seeing in price.
Thank you very much for that interpretation of the US dollar chart. Let's turn our attention to the chart of US oil. Obviously, of the macro forces that have affected our markets so far this year, rates, the US dollar, and the price of oil have certainly impacted investors' portfolios. So what we're seeing, that the end of the oil trade at the end of June and into July, seems like we're still in no-go trends, although we're seeing a pretty strong, pronounced relief rally. Help us understand this with the GoNoGo chart in front of us.
It's it's interesting because we talked for so long this year, really the whole year since almost the very first of the year, about the oil entering a go trend and being that's the place where outsized returns were being made all year. We were looking at oil and we were talking about the three prongs that were really hurting equities. Rising oil prices, rising rates, and the strong dollar. And if you look at what we're seeing now on these charts, we're seeing no-go trends in oil and in the Treasury rates, and today a first no-go bar in the dollar. Now we're at inflection points in all of them where we can see for rates, especially and for oil, we are testing zero from below again while in no-go bars. But to see all three of these now in a no-go, that's the first time that's happened all year.
Absolutely. So let's turn our attention not just to the S&P 500, but to the sector groups within the S&P and how they're doing on a relative basis to the index overall, to that benchmark. As you mentioned, the first half of this year, it was energy versus everything else, and we only saw trends in the energy space. But if we move over to that S&P sector RelMap, we're going to start to see that the various sectors are working, including the XLK, the XLY. So this is technology, consumer discretionary, We're even seeing outperformance from the industrial sector. So Alex, talk to us a little bit about the relative ratios for these individual sectors and what the outperformance means when we see the S&P 500 in a rally, in a go trend.
Yeah, let me throw the S&P back on the top of this chart. I think I still have oil in here, but you can see that what has been driving the rally in the S&P has been growth sectors again, right? So that's encouraging to people that are very strongly bullish on the equity markets. We see the outperformance coming from technology here in the top panel and discretionary in the second panel. Now, what we were talking about earlier before we went on camera was the strength in industrials. So now you've got a bit more working. You've got a bit more than just these two sectors. You've got industrials working as well, coming into a strong go trend. So if you think about other areas of the economy that are now starting to drive what we're seeing in equity prices, that's encouraging. We had a couple of weeks where it was only technology and discretionary. Now we see industrials coming into trend. And interestingly, utilities coming back to fire off a first aqua bar as well.
Absolutely. Very excited for the future work that's already under development for GoNoGo Breadth, but we won't talk about that too much today. It is nice to see multiple sectors, anti-correlated sectors, participating in the leadership of this new S&P rally. So let's dive into the XLK. Let's look at the price action of the information technology sector on an absolute basis, not relative to the index, but just looking at the chart of the XLK, seeing that strong rally out of above resistance. Talk to us a little bit about what's happening from a trend perspective here.
Yeah, so I believe we looked at this last week as well, and we were talking about how already technology was above the resistance from June. The S&P just this week has broken above those levels, if you remember. So technology was a little ahead in terms of where it was relative to these important levels, and that's why it was in a relative go trend on the sector RelMap. So you can see that strength has just been a little bit stronger and a little bit earlier to develop. Right now, we're seeing strong blue bars. We're seeing the oscillator above and finding support at zero. So go trend in place, positive momentum, things looking strong and still pretty okay for the technology sector.
Absolutely. Let's look at one of the largest constituents of the information technology sector. Let's pull up a chart of Apple, popular holding in many investor accounts, and certainly through the pandemic, an incredible outperformer in 2020 and 2021. What are you seeing in the chart of Apple?
Well, even more strength than we saw in the strength of technology. We saw how technology was leading the markets. Well, now we see how Apple is leading technology. We aren't even close to these levels of resistance that we saw in June, and we're actually approaching highs from the last time Apple tried to enter a go trend. So a much more established trend that we see this time, further away from resistance and actually getting set to challenge prior highs. Again, so lots of strength in Apple, strong blue bars, above zero on the oscillator, positive momentum.
And let's take a look at this same chart, but relative to the XLK. So for everybody who's watching the show, you think about the process of a top-down approach. We look at the asset classes that are working. We look at the sector groups of the S&P 500 that are providing leadership in this new rally. Then we want to look at the largest constituents and the leadership within those sectors. If you're looking for a little higher beta play rather than just sector allocation, you want to hold individual names. This is how we do it. So this is Apple relative to the technology sector, which, as you remember, was leading the benchmark index S&P 500. Seeing some strength, seeing multiple tests of the zero line. Alex, talk to us a little about these little green circles under price. Yeah.
So whenever you are in a go trend, whenever we see then the oscillator find support and resume in the direction of that trend, we're going to call those trend continuation icons, because we can confidently say at that point that the trend is in place and that we are seeing momentum return in the same direction as the trend. We're seeing positive momentum while in a go trend. So we just saw on heavy volume a return to positive territory, having found support at the zero line. And that gives us these green trend continuation icons when in a go trend. And a point that you were making a little while ago there about, finding the the strength within the stronger performing sectors. Another way to think about that, and it was something we wanted to talk about, a client who's using GoNoGo on pairs trading, right? So seeing these ratio charts, whether it's to Apple to technology or Apple to another company within the technology sector, you can really get a sense of where one is outperforming the other. And pairs trading is something that, of course, a lot of people do. And getting a sense of the relative performance from a GoNoGo trend perspective can be useful there too.
I think it was in our institutional research piece a few weeks ago that we said, is this a market for Cisco or Cisco? Meaning Cisco, the toilet paper and paper supplies company, consumer staples, versus Cisco, the technology company. And obviously those ratios and pairs work very, very well. Alex, let's move right along. We've talked to a number of our clients with strong historical memories about the leadership in semiconductors having a sort of a bellwether for the rest of the market. So let's pull up a chart of the SOXX, the Philadelphia Semiconductor Index, seeing some Go trend bars in semiconductors as well.
Yeah, semiconductors I found very interesting when looking at this chart this week because relative to technology, the larger technology sector not outperforming in the same way, right? Which is interesting because, like you said, that was a real bellwether for the sort of strength of technology a year or so ago when we saw that really strong run in 2020 and into 2021. So if you look back and you think about these levels of resistance that we've been talking about all day in June, we are right about there testing those levels again and actually falling away from and then rallying again. An oscillator at zero. So we're going to see if that holds. If that holds as support, then we'll expect price to make another attack on these prior levels of resistance. And that would be a strong sign indeed for the semiconductors.
Absolutely. And if we look at a holding within the semiconductors, let's take a chart of Nvidia and just see what's happening on an individual security basis as well.
Yeah, so very similar. We are seeing it struggle with these prior levels of resistance. But we also like to talk about how a rising tide lifts all ships, one of our favorite quotes. And with technology really outperforming, this could be an area where you are looking for catching up, perhaps market action that allows semiconductors to catch up. So Nvidia, if you were to see a bounce off zero here, if you were to see support at zero, you'd see a green go trend continuation icon close to these levels of resistance, perhaps an area where you might think about looking closely at the tech semiconductors to see if they can catch up with technology as a whole.
Absolutely. We're going to rip through a number of charts this week, and I know we've only got a few minutes left. Let's pull up the ARK Innovation ETF. Full disclosure, I do not share any genetic information with Kathy Wood, just simply a last name. But one of the villains of Wall Street, it seemed, public sentiment around her ETFs was at an all-time peak and then an all-time trough. And here we are seeing that same basing pattern, the retest of the zero line in the GoNoGo oscillator on Go bars, getting lots of Go continuation icons as we start to pull out of that nosedive. Anything that you would see as a threat to this Go trend in the ARK Innovation ETF?
Well, I mean, first of all, just really quickly, ascending triangle as a basing pattern. We love to show how GoNoGo charts can help with an understanding of traditional pattern analysis, because we always talk about the second half of a pattern is where you want to see things like increased volume. And with GoNoGo charts, it's very simple to see certain things as well. So in the right half of a pattern, we like to first see the oscillator break to the other side. Then we like to see struggles to continue to paint the colors of the trend that it was in. And then as we start to find support on the right side and the GoNoGo trend color change, you see how that sort of flows through this ascending triangle pattern. And now we see the break above resistance. But to your point really quickly, yes, there is there's some supply here. We're seeing these levels here where there's a lot of clustering. We also see that was support further back in the chart. So we'd like to see ARK get above these levels for then it to move higher and test the prior highs that are significantly further up on the chart.
Excellent. I know we wanted to talk about Peloton and we wanted to talk about Louis Vuitton, which came out a few weeks ago, but in the effort to show some of that increasing market breadth and the diversity of this rally, let's look at the industrial sector, XLI, which we saw outperforming on a relative basis the S&P 500. Here on an absolute basis, just a great go trend setup. And then within the XLI, Alex, let's take a look at John Deere. And tell us a little bit about what you're seeing on this chart.
Yeah, so John Deere, obviously a giant in that industry, and you're seeing a really strong run that has led to a change in trend. Oscillator, as we know, precedes trend change. Momentum is a leading indicator. So this chart really working out as we would like. NoGo in place, oscillator below zero, riding the zero line, getting turned away, NoGo continuation. And then towards the end here, unable to be rejected by the zero line, break above, leading trend change color above. So right now, we've moved through the aqua bars. We're in strong blue bars on Deere as we move up to challenge these prior highs. So a really nice, strong looking chart for Deere within the industrial sector.
And in our closing chart of the day today, I want you to pull up Ethereum. Now, obviously, Bitcoin being the largest by market cap of all cryptocurrencies, once you start to move down the altcoin list, you get into much more speculative and highly volatile securities. But Ethereum, not only on an absolute basis, but also on a relative basis to Bitcoin, outperforming, moving here to breakout territory. What are you looking for in terms of the scenario for this to play out, Alex?
Exactly what we always look for. We see it coming out of this no-go trend, breaking above horizontal resistance as the oscillator confirms on heavy volume. Remember, volume heavier when the oscillator is dark blue. So the oscillator breaking above zero here, right as the price tests that resistance level. You can see how the oscillator was banging up against the resistance line all the way through this no-go. And then when it wasn't, we see that trend change. And now we see support at the zero go trend continuation icon, that green circle as we move higher on Ethereum. And as you said, relative to Bitcoin, Ethereum looks strong as well.
Absolutely. So that's it for us this week, folks. Thank you so much for tuning in. If you're watching this on YouTube, make sure you also subscribe to StockChartsTV.com. You can carry this GoNoGo show and many other fantastic analysts with you wherever you go. Alex, I want to wish you happy trails. And for everybody else, we'll see you back here Thursday at 3:30 next week for an educational session from GoNoGo Charts. See you then.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.